Section 1:2 Introduction to Modern Portfolio Theory. The assumptions of MPT, Modern Portfolio Theory, MPT, is based on several key assumptions that form the foundation of the theory. These assumptions provide the basis for the mathematical models and analysis used in MPT. Here are the key assumptions of MPT. Investors are rational. MPT assumes that investors are rational and seek to maximize their utility or satisfaction. Rational investors make decisions based on objective analysis, considering the risk and return characteristics of investments. Investors are risk-averse. MPT assumes that investors are risk-averse, meaning they prefer less risk to more risk when faced with two investment choices that offer the same expected return. This assumption aligns with the conventional understanding that most investors are not willing to take on additional risk without the expectation of receiving higher returns. Investment opportunities are represented by a set of risky assets. MPT assumes that investment opportunities are represented by a set of risky assets. These assets may include stocks, bonds, commodities, and other financial instruments. MPT does not explicitly consider risk-free assets, but they can be incorporated into the portfolio analysis as a separate component. Assets are priced efficiently. MPT assumes that financial markets are efficient and that asset prices reflect all available information. Efficient markets imply that investors cannot consistently earn abnormal returns by exploiting mispriced assets. This assumption is consistent with the efficient market hypothesis. Investors have access to perfect information. MPT assumes that investors have access to perfect and complete information about the risk and return characteristics of assets. In reality, information is often imperfect, and investors may have to make decisions based on incomplete or uncertain information. However, MPT assumes perfect information as a simplifying assumption for the mathematical models. Investors have homogeneous expectations. MPT assumes that all investors have the same expectations regarding future returns, risks, and correlations of assets. This assumption simplifies the analysis by assuming a single set of expected returns and covariance matrix for all investors. In reality, investors may have different expectations and views on the market. It is important to note that while these assumptions provide the basis for MPT, they are not universally accepted as realistic or accurate representations of the real world. Critics argue that investors may not always act rationally, markets may not be perfectly efficient, and perfect information is not attainable. Nonetheless, the assumptions serve as a starting point for the mathematical models and analysis in MPT, allowing for quantitative analysis and optimization of investment portfolios. The assumptions of modern portfolio theory, MPT, have important implications for portfolio construction. They provide the framework for analyzing and constructing efficient portfolios that balance risk and return. Here are the implications of these assumptions for portfolio construction: risk and return trade-off. The assumption that investors are rational and risk-averse implies that portfolio construction should focus on the trade-off between risk and return. Investors seek to maximize their expected return while minimizing the level of risk they are exposed to. MPT provides tools to quantify and analyze this trade-off, allowing investors to construct portfolios that optimize their risk and return objectives. Diversification. The assumption that investment opportunities are represented by a set of risky assets highlights the importance of diversification. MPT emphasizes spreading investments across different assets and asset classes to reduce portfolio risk. By combining assets with low or negative correlations, investors can reduce the impact of individual asset-specific risks and achieve a more stable portfolio. Diversification is a key strategy in MPT for managing and mitigating risk. Efficient frontier. MPT's assumption of rational investors and efficient markets leads to the concept of the efficient frontier. The efficient frontier represents the set of optimal portfolios that provide the highest expected return for a given level of risk or the lowest level of risk for a given expected return. MPT enables investors to identify portfolios on the efficient frontier and select the one that best aligns with their risk and return preferences. The efficient frontier helps guide portfolio construction decisions by providing a range of optimal portfolios. Portfolio optimization. MPT assumes that investors have access to perfect information about the risk and return characteristics of assets. While this assumption is not realistic in practice, it allows for mathematical optimization techniques to be applied to portfolio construction. MPT provides tools for calculating portfolio statistics, such as expected returns, standard deviations, correlations, and variances. These statistics are used in optimization models to determine the optimal asset allocation that maximizes return or minimizes risk, given the available investment options. Homogeneous expectations. The assumption of homogeneous expectations simplifies the analysis by assuming a single set of expected returns and correlations for all investors. However, in reality, investors may have different expectations and views on the market. While this assumption may not hold, MPT still provides a useful framework for portfolio construction by allowing investors to incorporate their own views and expectations into the analysis. It's important to recognize that the assumptions of MPT are simplifications of the real world and may not fully capture the complexities of investing. However, they provide a systematic approach to portfolio construction and help investors make informed decisions based on risk and return trade-offs. By considering these assumptions and their implications, investors can construct portfolios that align with their investment objectives and risk tolerance.